The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, joined this morning by our man Basil Chapman, filling in for Tom again. Basil, good morning.
Good morning, and I have to congratulate you. You did a beautiful, unscripted analysis of Disney yesterday, and all your points were met, and Disney is up huge today. I have to congratulate you on that analysis.
I appreciate it, Basil. We got a lot of action in earnings, of course. It's a probability game, right? And this time it turned out to be to that advantage, to Disney to the upside, and the markets to the upside with that as well. S&P's up about 18 points at 33.18. We're now only about 80 points of all-time highs in the S&P's. NASDAQ up 28 points, 11,114. The Dow up 255. Gold contract up $40 to 2,060. And as Basil had mentioned, Disney trading higher on 100 million plus subscribers for all the brands together. They're launching a new service. They have so much content under the Star brand. They acquired from Fox, so they're up 8.7%. One of the other companies out last night, not as fortunate, Beyond Meat, down about 6.3%. And both of those stocks, our man Kevin Hinks, he was talking about them yesterday. Big week of earnings, of course. Let's go over to Kevin. Folks, every day right after this program, if you haven't checked it out, especially option season, trading with defined risk, check out the Thinkorswim platform, download the demo, click on the link on the front page of TFNN.com and check out that program. Kevin Hinks, good morning.
Good morning, Tommy. Good morning, Basil.
Good morning, Kevin.
Some interesting data today. How about Disney? How can you report such bad news and the stock still be up? And what we talked about on the show is they're going to report bad news, right? The numbers are going to be bad, but how do they guide to the future and what do they have in the pipeline? And it turns out they did have something in the pipeline. So I think the positive news around Disney and the subscriber use in Disney Plus that gets them way ahead of schedule can be seen as an overall positive from this stock. It's a pretty good story, actually.
Yeah, it's pretty cool. You look at the action last night. The numbers come at exactly 4:05. It spikes a little bit lower. The conference call at 4:30. Not only are they going to release Mulan, right, direct to consumer, they're going to do that because things are just getting pushed back, but a completely new streaming service. They got so much content, man. And of course, Beyond Meat, they've traded so much higher, but not living quite up to the expectations, a little bit lower today. And what are we looking at, Kevin, in terms of what you guys are talking about today? Interesting, we had that jobs number, of course, coming out. That puts a little volatility. Then you have Trump out there maybe saying he's looking forward to Friday's number of non-farm payrolls and, of course, earnings season. So what are you guys looking at this morning in your program?
Sure. The focus of today's show will be Roku. Now, we were going to do an in-depth analysis of Square, but they kind of jumped the gun on us and released earnings last night because a media outlet had the earnings and released them. So they had to release a little early. So Square is kind of, we basically missed our opportunity to trade Square, as a lot of people did, frankly, because they came out a day early. But we'll focus on Roku. We'll focus on, by the way, if you listened to our show yesterday on Beyond Meat, you heard Likefolio's data talking about a decrease in demand for some of Beyond Meat's problems. So this sell-off in Beyond Meat of about almost 6% could have been forecast on yesterday's show by us. Pretty interesting.
It is.
That was very good. Good analysis.
You know, Roku, Kevin, it's pretty interesting. Myself and my household, I just canceled Fios, went into Spectrum in Florida, and you don't even need cable boxes now. You can just use a player of some sort. You download the Spectrum app, that's your cable TV, and so we got 4 Rokus in our house. So I'm an interested consumer. I'll be listening quite the acceleration. I have the chart up here on the Thinkorswim platform from $58, right, up to $168. The Analyze tab, we're looking for an $18 move, more than a 10% move on Roku. And the one-day expected move, Kevin, you've explained it before, but we're looking at it so often in earnings season. Could you just briefly explain where this number comes from and why it appears as you have something like an earnings event in the Thinkorswim platform there?
Sure. If you look on the trade tab of the Thinkorswim platform, right in the middle, on the third line from the top, you see yellow MMM, which is the market maker move. And today for Roku, it's about $18.25. Well, that appears, if you look in the right column, when the front expiration, the implied volatility of the front expiration, which is in Roku right now about 162, when that number goes above the next expiration, which is 103, that market maker move icon and the corresponding number appear automatically. It's not something you can call up. It's not something you can look for. It appears when that happens. So that's when you see that. So that means that there's some expected event in the front expiration. And the fact that implied vol is now 162 implies just that. So that market maker move, it illustrates the one-day expected move for Roku based on this event. So when you're trading the implied volatility in the August 7th expiration, you're basically trading the expectation for that one-day $18.20 move, guys.
It's pretty cool, man. And if you're trading options, you're trading them around earnings, you got to know what the market's expecting for an expected move. And it's pretty cool that you just apply that type of logic and the numbers in there in terms of adding up basically an at-the-money call, an at-the-money put that expires today, that type of logic, and what they're pricing in, $18.20. So, Kevin, on a week where we get, the big number, of course, on Friday with non-farm payrolls, how do you look for that at all? Is that something you ever look for earlier in the week as you look for the market, especially coming into maybe companies that are reporting Thursday night when you get such an economic indicator at 8:30 a.m. before the market opens on Friday? How do you ever look at that?
Yeah, you have to be cognizant of that number one data point of the month, in my opinion, because think about this. If that's a bad number, corresponding with a bad number in terms of your earnings, that move that you're trading for could be accelerated by that. Now, if they counteract each other and they negate each other, one good, one positive, that could lessen the expected move. So, yeah, it absolutely adds some level of implied volatility to the overall market as we get, that day, that data point, 7:30 Chicago time, 8:30 Eastern, is in itself an event that's coming up at the end of the week on Friday. So, yeah, it's something you always have to prepare for and understand, guys.
I just find it so interesting, right? We're now like 80 points away from the all-time highs in the S&P. We're coming into this number. We just had private payrolls that pretty disappointed in a pretty big way. Only 168,000 jobs, I think, added private payrolls. And the market almost at those highs. Talk about price for perfection, and we'll see if we live it out. Well, Kevin, we look forward to the program, man. We look forward to seeing what you guys do with Roku, and we'll talk to you. We'll be tuning in about 45 minutes.
Thanks, Tommy.
Thanks so much. Folks, check out that program, Fast Market. You want to talk options, defined risk, right after our show, 11 a.m. Eastern Time every day. Kevin Hinks, Alex Coffey, the team at TD Ameritrade Network. Earnings season, we get the S&P is up 20 points. We get the Dow up 6. NASDAQ up about 34. Stay tuned, folks. Basil and I are coming right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Tommy O'Brien, joined by Basil Chapman. We get the S&Ps positive by 19 points this morning. Jumping over to that payrolls number quickly, Basil, before we get into a few different things. So private payrolls, 167,000 in July. That number coming out at about 8:15 a.m. this morning. June's count revised sharply upward to 4.3 million. So pretty interesting, Basil, right? You get 4+ million in June, and then it almost all disappears in July as of that first number, the first reading at least of 167,000 jobs added ahead of Friday's number. But then you had President Trump teasing a big jobs number Friday. And we know how that's gone in the past, Basil, in terms of him leading that number. If it's a big number, quite a dynamic as we look to the market, and we're so close to all-time record highs in the S&P unfazed.
I don't recall what the result was when he had teased numbers before. Did they come out the way he discussed them, or
I'm pretty certain they did. Yes, we should pull it up for sure, but yes,
because usually about a day before. We know that whatever administration is in power at the particular moment, they usually know something the day before. But this is 5 days before, so those numbers can change. And it's a little risky because it really has to be spectacular, because it could change, and that would not be very good for either him or the market. So let's see what happens.
We're only 48 hours really out from the number right now, so that's something that they could definitely have, I think, in that time frame.
I guess so. So I'd forgotten yesterday. I wanted to talk about it. We had discussed. Was it on Wednesday? So it must have been Monday. We were looking at natural gas, and I said natural gas. You asked me about natural gas. I looked at it and I said, "Oh, look at that! It's breaking out. It's gone above the left side peak B, and it should be in C. And there's a Chapman wave inside track repellent zone. I think it was around about 188 at the time, something like that. And that day it closed, and I had drawn this, and I said there's a cup formation, and the way it looks, if it breaks above the high that was made right here on the 27th of May of 1 point, this is the continuous contract of 2.092. Not only will that be very bullish, I expected that when we both looked at it, it looked very positive. It looked as if it should go there. Well, that day it closed over. It went to 2.15. Yesterday was another very big green candle, and this is what I call a Chapman wave. It's an overlapping wave, and it also has going to a leg C in a cup formation in a shorter time span. That's usually a breakout. I call it the cup and ladle pattern. And that's very bullish because it should take you to at least a D. But anytime it pulls back, it should retest the left side lip. So that did that yesterday, big green candle. And today, you're looking at natural gas at 2.261. And the 200-period moving average, I'd mentioned this guy either in your show or in my show afterwards, that in passing, that if it manages to get even to the 2.18 level, it should test the 200-period moving average. That's usually the rule that I have. In this case, 2.26. So today it went to 2.261 in leg C. This is I'm really fascinated with this market. Out of the blue, you've got natural gas trading in unison in the same direction as crude oil. And crude oil is up sharply in leg D, broke that rectangle pattern that we were looking at as high-level consolidation. Leg D in the daily, leg D in the weekly, and crude oil, if it goes, it's at 43.38. If it can go above 44.10, then that 200-period moving average, like with natural gas, becomes a magnet over the next couple of days. Now, that would be 44.76 as leg D in the weekly. Isn't this interesting, the way the commodities are just, they're in their own world, each one. I mean, usually you don't get the natural gas and the crude oil going up. They usually move kind of in counterpoint, not in the same proportion. Sometimes, yes, but mostly they just kind of go in different ways. Like gold and the dollar used to act when they went in a mirror image.
Basil, I was just going to say it's a perfect segue. We're going to commodities. First thing I'm usually looking at is maybe gold, especially lately. We're at 2,060. And who calls into the show? My dad, the gold expert.
No.
What's going on? Good morning.
O'Brien.
What's happening, guys? How you doing?
Hi,
doing great. How are you doing?
It's quite a market. Doing good, man. Doing good. Well, listen, Tom, first off, I got to congratulate you. I mean, you just started that newsletter and you get that option trade, that bull spread on Disney this morning. That is phenomenal, man.
Well, thanks so much, man.
Big number, man. Big number.
Probability game, things work out, and they worked out today, so that's always nice, man. We take some profits, and we go on from the next one. But it's a nice trade for sure. And I said to a friend this morning,
it's a monster. It's not just a nice trade. That's a freaking monster, man.
Thanks, man. Thanks. And for people out there in Disney, thinking you missed it, Basil and I talked about it yesterday. Any of these stocks, if you're in a long-term investor and you find value, even Disney right now. We're still, I mentioned to one friend, we're only right where we were on the highs of June. Folks, when you go back on a daily basis, to think you missed the run in a long-term investment in Disney when you're at 153 before this market, you were at 127 and change in early June. They're just confirming what, a lot of times people had thought, but they got to live up to it, right? They got to sign the people up. They got to have a plan. And it seems like that's the case. And it seems like they'll be able to get back to business at some point and stop losing billions of dollars in the parks. But quite a pop, man.
No doubt. And if we talk gold, the bottom line out here is that, you got a ABC structure more than likely up to that 2,700 number. The dollar is, this is fast and furious, man. The dollar is going after a B point today that lines up with that 88 price area. So right now what has happened is, and this is really dangerous if you are bullish the dollar, because 92.546 was hit 92.575. And I suspect it's not going to probably break it today, but if it wakes up tomorrow morning and breaks this thing, then your price projection is the 88.750, and then of course that 88's been sticking out there for a long time. So this is going to get really intriguing, man. It doesn't look to me like it's going to stop, man. Because what gold loves to do is more than even a one-to-one ABC structure, up or down. So this baby, it's pretty intense. There's no doubt about it. And we know that more Brent's coming into the marketplace. The real question is going to be, you get the Democrats at 3.5 trillion, Republicans at 1 trillion. It's going to come in at 2.2, 2.5 or something. And
So,
that's
Tom,
what that market is projecting right now. That's what it looks like. So,
Tom, would you say that the dollar pulling back like this without them necessarily doing anything is good for the administration in that the lower dollar will attract more money for our goods?
It'll be easy to push goods out. I mean, the other side of that, of course, is that you're not going to be able to run around and go to Europe and go to the rest of these places because, like, the euro right now is breaking topside in a monster way. And if you're going to go overseas, guess what? It's going to cost a lot more dollars. I mean, right now, this baby's at 118, the euro, and your next leg up on this euro, man, is a monster leg. It's not here. Let me pull this up for a second.
Yeah, quite a move.
You're talking about, and all of these, like the euro, the pound, the yen, they've been in the doldrums for a long time. I mean, this euro.
We got to go to break. Stay with us for one more minute.
On the agenda, and
we'll be right back, folks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Tommy O'Brien, Basil Chapman, and my dad, Tom O'Brien, on the line. So we were talking about the euro there, and it's just such a big move. I wanted to finish the talk. So if you can finish and jump in, Dad, what you were saying.
Yeah, what I'm looking at there, this euro wants to run to 140, and you're at 118. So it's a monster deal, man. And that's telling me that we are going to get that ABC structure on the way down. And, you know, the bottom line is even fundamentally it makes sense. So the euro, the pound, they've been in the doldrums for 5 years, man. So the bottom line is that they're going against it right now. And, you know, that's what's putting firepower. In fact, if you look at the gold contract intraday right now, I know it's up $44. It seems like a lot, but it's a confirmed intraday ABC up to 2,080. It just blew away a B point with monster volume. So this is going to be a wild day, man. And then, the bottom line is that this baby's going in space.
No, I mean, since you've been on.
Oil just come out, Tommy. So oil and Basil, the oil contract, what did they come out with? They just came out with.
Perfect. We get EIA inventories at 10:30. I know we got a lot going on, but that hit in the market. So oil, quite the pop as well, up in 43 territory. And what did they come out with for the inventories? You know,
they crude oil inventories fell 7.37 million barrels.
Okay. Pretty muted reaction right now. I get the contract up there. Maybe it's just all about whether it's the economy and the dollar, but the oil, I mean, this is quite a move it's had as well. You put oil on a daily, man, and that's a decisive break it's had today into that gap and now above, going back to that gap we've looked at since March.
No doubt.
Yeah.
Okay, guys. I'll let you go. Basil, thank you so much, man. Appreciate all the work. And Tommy, you have a great day, safe day. And all you Tigers and Tigresses, go get them.
Enjoy yourself.
Thanks so much, man. Love you.
Okay, man. Love it. Bye-bye.
Yeah, just action all over the place, Basil. I mean, you know, you got to tie in the currencies when you get this types of move in the currencies and the commodities. I had the euro up there. The move's been pretty remarkable that it's had recently. But when you put it in context of where we were in that 140 area, you know, 5-6 years back, seems completely feasible with what's going on in the trends that are in the market right now.
So there are a couple of things that I'm looking at. There's a long-term trend line, and I like trend lines just to give you some information. If you use time, you're bound to break a trend line. So it means something else. It's how you deal with a trend line and how you treat, if you break to the upside or the downside, how when you come back to that, does it continue in the direction or does it change? And the euro has broken the very long-term, it's a reasonably long-term trend line. It goes back to 2014, high around about 140, pulls back all the way to the probably about $1, maybe it was 1.05, and then it rallies and it gets to the 200-period moving average, and it breaks down. And once again, I always talk about these moving averages. You don't need a 200 if you're doing looking shorter term. But once it comes into focus, it becomes really important. Look at the way it was a repellent. It was a magnet and then a repellent back in 2017. But this time we pulled back in the euro and it didn't take out the low that was made. This is a continuous contract, so the prices might change. But I've got 1.033, and that was back in January of 2017. The last dip went to March of this year and was 1.06. And look at this, for 2 months now, you've been right on the border of touching the 200-period moving average. And that's why I always think that it's really important that we look at what is working and why it's working. That's all. In this case, it's saying that 200-period, this time if we break above it, it could turn into support. So it really is important.
You know, jumping around a bit, CVS out with their numbers today, and pretty remarkable dropping. We were up to $70, down to $64. Like Kevin Hinks mentioned, we got Roku numbers after the bell, about $166. I was looking at Uber. Quite the move Uber had yesterday, up like 5%, extending that today. Interesting, well ahead of their numbers. Tomorrow after the bell, they're somewhat similar, Basil. Now, I've talked about Uber on the air. I've talked about it in my newsletter. There's nothing like Disney in terms of and that's what, you can continue to say, the brand of contents they have. Last night, they confirmed it. They have so much great content. They need another streaming service completely to be able to maximize their profit potential. Uber, not quite the same, right? But what is the same is that they have a lot of short-term pain going on in terms of their business, but they're also expediting an area of growth that's going to be there when they come out, like the delivery. But Uber, a lot of pain. It'll be interesting to see what they come out with. What do you see when you look at Uber yourself, if you don't mind?
So it's an interesting thing. I've got it on my cell phone, but for some reason I've never had to use an Uber. I've always been ready. I even wanted to practice just to go maybe to the supermarket and back. I thought, you got to have it around me. You know, my kids do it all the time, but I just have it for some reason. So I'm looking at this as an absolute neophyte. So what I am looking at is this 200-period moving average in the weekly. Now, from what I understand, Lyft and Uber have very different, although they both do transportation, they're very different in the characteristic of their internal, the mechanisms by which they function. And I think that's what you can see, that Uber is starting to try to build a base. And I'm just looking at this on a chart formation. The weekly chart has gone to a peak B, and it's right at the 200-period moving average. Uber would need to get to, it's at 33.05, up 36 cents, up 1.12%. Two things have to happen. It has to break into the 35.50 area and then get to, once it can clear 35, then that 37 level of the 200-period moving average becomes very important. And if it hits it this time under these conditions, my thinking is it's going to really improve the monthly chart, and that the low that was made just under 15 back in, I think it was in March, March, that could be quite significant. So this is a very important, on the chart as far as I'm concerned, very important moment, because if it's a 32.98 right now, in the next 2 weeks, if it starts trading underneath 29.50, that's a real problem. So this guy, I don't know what's going on business-wise, but right now it looks like it's really trying to build a decent foundation, price-wise.
And you know what lines up nicely in there? I'm always looking at Fibonacci numbers. This run up, it had to those highs in early June from the lows of $13. I mean, remarkable numbers, up to $38.78. You come right back to that basically 38% retracement number, which is 29.23. So kind of right around that area you're talking about as well. That's almost where we came back to before we popped in the last few days as well. So it'll be interesting to see where we go. Now, Uber versus Lyft. I believe I've used Lyft. I've used Uber a lot of times for their ride service and for the Uber Eats delivery. And you're right that you get it on your phone. That way you have it when you need it. Because I'll tell you, one time I did use it, Basil. I'm driving to Orlando to fly to, I believe, Mexico a couple years ago to attend a great friend's wedding. And what happens? I get a flat tire. I have run flats on my car. That doesn't last because it's such a big ride. It's an international flight, so you can't be late. And I managed to pull over in a gas station, call an Uber. They pick me up in 10 minutes. I'm on my way, and then the car gets towed. But so you're right. You have it on the phone, man, when you need it. Because if I hadn't, I would have been in trouble. I must mention,
by mistake, I used it in London, and evidently I got it, but I never saw the Uber at all. I did it by mistake.
Well, we get Uber earnings tomorrow after the bell. Stay tuned, folks. We'll be right back in 3 minutes.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We got the S&P is positive by 18 points right now, 33.18. Let's go to our man Teddy Kegstad, as we do every Wednesday at 40 past the hour, folks. And you can check out Teddy every trading day at forex-trading-unlocked.com. Great time to talk some Forex. We got the dollar moving. Teddy, good morning.
Good morning, Tommy. Yeah, how about it? Last week, we've been bearish to dollar now for quite some time, and we were talking about, we were looking for a little bounce, and I think we had that Friday going into Monday, and obviously that was all it was, right? So
quite the acceleration even today, for sure.
So, and we're pressing some big lows now. The low that we had made last week before we had that little correction, we're treading right above a support line that is a multi-year support line. We were talking about that already last week, that we were heading towards it. And I think that if we take that out this week, and especially if we settle below the low of last week, that's very, very negative, the dollar. Right now we're trading, I think, around 92.6336, somewhere like that for the dollar index. It has a chance of getting down to the 88 level, definitely if it settles below the weekly low from last week, I think. So now, overall, you got to remember, markets don't travel in a straight line, so I'm very bearish the dollar. And I think that the ISM number, like you see how the stock market's rallying right now, the ISM number is a big bond number. It's also a big currency number. So with the momentum that's in place, especially with an ISM number like that, I think that unless we have some real big shakeup with the unemployment number, that this trend is going to continue with the dollar, because there's no reason to buy dollars right now. Everyone's looking to buy the stock market. They're looking, and gold, the currency is, the metals right now are off the charts, So, and I think that that's something people need to be mindful of, is that, like we showed with Friday's bounce, like how fast a correction is going to happen in the currencies right now. I mean, you had a $2 to upwards of $3 move in some of the major currencies from Friday's spike, high or low, depending on the different correlation currency. Sure. And then it topped out on Monday, and since Monday, the dollar bears came back growling fierce. I mean, you don't usually see the euro correct like over two handles and then come screaming back within another day.
That's the exact volatility. I was just going to say that's the exact chart I had up there right now, just a 5-day chart on a 15-minute basis, and you go from 119.08 to go above 119, right? You dip below 117 to a 116 handle, and for all intents and purposes, we're right back at a 119 handle at 118.90 on just the euro dollar.
Sure. And that's an amazing volatility, and now I think that trend, that momentum, It's very, very secure. I mean, I've been talking that, we need a correction in the dollar would be nice. I think we had it, and it just happened over the course of a weekend, basically.
Sure.
So, and I think that the weekly close is going to be significant this week, and I think we have a good chance at settling on lower move lows. And we know that when you're making lower move lows and lower move highs, we have a bear market, Now, 88 handle. Now, you got to think about this. The euro, if you think about the major currencies now, they're really pushing new highs against the dollar. If we get to the 88 level, that's not that far away. That's only $4 in the index, So that means that your majors like the euro and the pound and the yen, they're probably going to be capping out like in another like $2 or $3, So the lower 120 handle for the euro, probably 122 tops. And then at that point, you have to think that we're going to have some digestion, I mean, we're talking about multi-year trends and charts that we're looking at here. So, and to have a monster break that would continue doesn't seem very, very possible, especially like we look at the ISM numbers. That's very good. But earnings are the main variable that keeps the market afloat. And I think that where earnings were keeping the market afloat, surprisingly, in the second quarter. The third quarter, I think, is going to be held up by these numbers like the ISM. You have to remember what drives ISM. It's a supply chain thing. What happened over the past few months? You had executive orders, you have manufacturers that were slowing down in some areas, but then ramped up production because they had to meet a national need. You know what I'm saying? As that wavers, that could be a big influence on the currencies and all these other markets once that starts to waver, unless we have a second wave, in which case ISM might start to surprise us every month in and month out for the rest of the year. So I think it's going to be interesting to really watch that, and the unemployment correlation. If unemployment continues to rise and not see the little kind of pattern of coming back a little bit, that's going to be a very, very big thing, especially as we head into the end of the third quarter. And then I think you might see a bounce in the dollar. But until then, I think the dollar bears are there. The interest rates are already pretty much as high as bid as they can go, So, and I think the metals, I don't see, I'm sure Tom doesn't think that the gold is going to stop going for a little while yet either, especially with silver ramping up.
What's interesting is, so Basil Chapman's filling in for Tom. Tom's out today, but Tom just called into the program before you came on the air at about 10:15. And so we're talking gold, of course. We're talking just what you were talking about, even the dollar index, the 88 range, which is perfect. So that tied together. And gold, I mean, the remarkable run, right? Even as we were on the air, you traded from, I got a daily up. Let me see. I mean, you had an acceleration from under 2,060 to 2,070 for an all-time highs, and he was looking for maybe 2,080, the moves in that same way. But we looked at the euro, we looked at the dollar, and a similar sentiment, man, in terms of where that dollar could go because of where we've been, the consolidation we've had. And maybe some longer-term trends, but that's where things would possibly be heading. Yeah,
sure. And especially with the silver and gold chart, if you look at those, they look like a euro versus the dollar chart. Especially with the way they came off their highs on Friday and then they broke and now they're screaming back up. I think that you have to follow those. I think that is really your lead right now is the metals market, because there's as long as the dollar bear is there, I think the metal bull is there as well.
Yeah, I mean, that is how it worked, almost inverse to that market. When you look at the dollar strength versus the gold, and the run we've had with gold at 2,070, man. But quite a consolidation, even gold, right? You back things up. I mean, it's taken us now almost the better of, you're back there in 2011, so 9 years to get basically above that price level, and we'll see where we go. Well, Teddy, we always appreciate the update, man. We got so much action in this dollar index, of course. Folks, every trading day, forex-trading-unlock.com. And Teddy, we'll talk to you next Wednesday, man.
Absolutely. You guys take care. Be safe.
You too, man. Have a great week. All right, folks, stay tuned. What else we have going on? Jumping back to the markets right now, S&P's pretty muted action in terms of just holding at these levels. S&P's right now, 33.19, and we've been ticking at this level since about 4 in the morning. We climbed to 33.21. You get a little bit of volatility in the S&P's on that private payrolls number, but the market right back to that level. S&P's up about 20 points. Checking in on some of the stocks with action. Disney, got to keep our eye on that, up about 10% for the day. Quite a rocket ship. Disney, we get Roku earnings after the bell. Roku up a bit ahead of those. And what else do we get? Beyond Meat last night with their numbers down about 4%. CVS checking in, down about 1.1% on their earnings after the bell last night. Moderna out with their numbers down about 5.6%. And how about Novavax on some potential vaccine from 160 almost to 103, folks, overnight, and then to 198, and right now we're up about 10%. Stay tuned. We'll be coming back with Basil in 3 minutes. Come on back, folks.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Tommy O'Brien, joined by Basil Chapman this morning. And Basil, I see you got a chart of the Dow up there.
So there are a couple of things that are really important. I've been discussing this for weeks, actually. Whenever I was interviewed by Dad and also on my show, there's a technique I call the Chapman Inside Track Repellent Zone. You see these the green line here, dashed line declining, and this little parallel line? Whenever the prices go into that area, there's a lot of resistance. You can see it's the same thing in the weekly. And what I've been saying to subscribers, the reason why we want to stay long the Dow, we've been long since the 23rd of March and then added just below 21,000, is because there's a chance that the Dow is playing catch up and there's a rectangle formation. Could see it go. And look what happened. Today we broke out nicely above that. weekly chart, well, still a few days to go, 2 days to go, and it's above that. So this is exactly what you want to see. And I wanted to show you something very interesting, because Disney has exactly the same thing. And the level that Disney would have to break for that, I drew it in some time ago. Look, in the weekly chart, you see this decline. Look at that. Inside Chapman Wave, inside track, repellent zone. Look how many times it's been repelled. Now it's testing that green line. So if Disney's able on a weekly chart to close somewhere in the 132 area, that'll be the first time it's broken that resistance. So I'll discuss it on my show, what this particular technique means and how one can use it. So it'll be quite an interesting show.
Awesome. Well, we look forward to it, man. And folks, check out the opening call. A lot of great subscriber webinars. Basil just did one in the last 2 weeks for subscribers. 90-minute webinar. You gain access to that archive. 30-day money-back guarantee for the opening call. I read it every morning, Basil. I check out those charts. I check out the commentary. And I appreciate you joining the program, filling in for Tom, man. And, of course, we look forward to the Tiger Technicians Hour coming up live at noon.
Thank you very much, Tom. I always enjoy it.
Thank you, Basil. Folks, check out that program at Noon with Basil. Check out the opening call, and stay tuned for Fast Market. They're going to be talking Roku coming up next. Stay tuned, folks. We'll be right back.